What if I told you 3 of the most powerful stocks to buy right now are hiding in plain sight, in sectors you use every day? These companies are so deeply embedded in our lives, their growth seems almost inevitable. Today I'll break down why these 3 stocks, one in retail, one in food delivery, and one in public safety tech, are on my must-buy list. We'll dive into their financials, growth strategies, and what gives them a real edge in today's market. These aren't just companies, they're market-defining forces with massive moats and long-term potential. If you want investments that can anchor a wealth-building portfolio, you're in the right place. Hit like, share your thoughts in the comments, and subscribe for more investing insights. Let's jump in. First up is Axon Enterprise, ticker Axon, the company behind the taser, but so much more. Axon is not just a name synonymous with non-lethal weapons, it's a powerhouse in the public safety technology sector. From its humble beginnings, Axon has grown exponentially, becoming a critical player in law enforcement technology. Their journey from a single product to a comprehensive suite of solutions is nothing short of remarkable. Axon has evolved into a full public safety technology ecosystem with products that are indispensable for law enforcement worldwide. Their innovations have transformed how police departments operate, making them more efficient and effective. The integration of their products into daily police work has set new standards in the industry. Their hardware, tasers and body cameras, are industry standards, but the real magic is in their software. The TASER 7, for instance, is a marvel of engineering, providing non-lethal options that save lives. Meanwhile, their body cameras capture crucial footage, ensuring transparency and accountability in policing. Evidence.com, Axon's cloud platform, manages and secures critical police data, making agencies deeply reliant on their system. This platform is more than just a storage solution. It's a comprehensive tool for managing evidence, streamlining workflows, and enhancing the overall efficiency of police work. The ability to securely store and easily access data is a game-changer for law enforcement agencies. Once a department adopts Axon's ecosystem, switching is nearly impossible, creating powerful customer lock-in. The seamless integration of their products means that departments become heavily dependent on Axon's technology, making it difficult to transition to other systems without significant disruption. Axon keeps expanding its platform, records management, dispatch software, and even VR training, all integrated for maximum stickiness. Their records management software simplifies the handling of vast amounts of data, while their dispatch software ensures quick and efficient response times. The VR training modules provide immersive, realistic scenarios for officers, enhancing their preparedness and effectiveness in the field. This is the razor and blade model at scale. Sell the hardware, then generate high-margin recurring revenue from software and data. The initial sale of tasers and body cameras is just the beginning. The real value comes from the ongoing subscriptions to their software services, which provide a steady stream of income and ensure long-term customer engagement. Their total addressable market is huge and growing, with international expansion and new sectors like fire and EMS on the horizon. Axon's technology is not limited to police departments, it's also being adopted by fire departments and emergency medical services, broadening their market reach and impact. Financially, Axon is a growth machine. Double-digit revenue increases, rising recurring software income, and strong profitability. Their financial performance is a testament to their successful business model and the high demand for their products and services. Investors are taking note of their consistent growth and profitability. Their deep customer relationships and network effects make it nearly impossible for new entrants to compete. The trust and reliability that Axon has built with its customers create a significant barrier to entry for other companies. Their established presence and comprehensive ecosystem give them a competitive edge that is hard to match. As more agencies join, sharing and collaboration become easier, reinforcing Axon's dominance. The network effect means that the more agencies that adopt Axon's technology, the more valuable it becomes for everyone involved. This interconnectedness fosters collaboration and enhances the overall effectiveness of public safety efforts. The demand for transparency and accountability in policing is only growing, and Axon is the clear beneficiary. In an era where public scrutiny of law enforcement is at an all-time high, Axon's products provide the transparency and accountability that communities are demanding. Their body cameras and evidence management systems are crucial tools in building trust between police and the public. Yes, the stock isn't cheap, but you're paying for a fortress business with SaaS-like margins and a massive runway. The premium price of Axon stock reflects the strength and stability of their business model. Investors are willing to pay a higher price for the security and growth potential that Axon offers. This is a long-term compounder. Buy, hold, and let Axon execute. For investors looking for a reliable, long-term investment, Axon is a solid choice. Their consistent performance and growth potential make them a stock worth holding onto for the long haul. To recap, market-leading hardware, sticky software, global growth, and powerful societal tailwinds. Axon's comprehensive approach to public safety technology, combined with their innovative products and expanding market reach, positions them as a leader in the industry. Their impact on society and their financial performance make them a standout company. Axon is at the top of my list for a reason. Their proven track record, innovative solutions, and strong market position make them a top pick for any investor looking to add a high-performing stock to their portfolio. Axon Enterprise has grown into a powerhouse with a market cap of $59.77 billion. In 2024, it generated $2.08 billion in revenue, while net income came in at $377.03 million. Earnings per share sit at $4.26, but investors are paying a steep premium, as the stock trades at a price-to-earnings ratio of 179.87. If you want exposure to a tech company that's doing good and growing fast, Axon is a must-watch. Their commitment to improving public safety and their impressive growth trajectory make them a compelling investment opportunity. Their moat is deep, their growth is real, and their mission is vital. Axon's unique position in the market, combined with their strong growth and important mission, sets them apart from other tech companies. They are not just a business, they are a force for positive change in society. This is the kind of stock you want in your portfolio for the next decade. With their consistent performance and long-term growth potential, Axon is a stock that can provide stability and returns for years to come. Axon is redefining public safety and rewarding investors along the way. Their innovative approach to public safety technology is making a significant impact, and investors are reaping the benefits of their success. That's why it's my first pick. Axon's combination of innovation, growth, and societal impact makes them a standout choice for any investor. Let's move to the next. Next up is Domino's Pizza, ticker DPZ, a company that's much more than just pizza. While most people know Domino's for its signature blue and red logo and those familiar pizza boxes, there's a lot more going on behind the scenes than meets the eye. Domino's has quietly become a global powerhouse not just in food but in technology, logistics, and business innovation. Domino's is a technology and logistics powerhouse obsessed with delivering hot pizza fast and efficiently. Every step of their process, from the kitchen to your doorstep, is engineered for speed and reliability. Their delivery drivers are trained for efficiency, and their kitchens are optimized for rapid order fulfillment, ensuring that every pizza arrives piping hot and fresh. Their early investment in digital ordering and innovations like the pizza tracker set them apart long before food delivery apps took off. Domino's was one of the first to recognize that convenience and transparency would define the future of food delivery. The pizza tracker, for example, lets customers follow their order in real time, building trust and excitement with every step. Their seamless digital platform drives higher sales, better margins, and gives them invaluable customer data. With over 75% of orders now coming through digital channels, Domino's can analyze trends, personalize offers, and optimize operations in ways that traditional pizza chains simply can't match. This digital edge is a key reason for their consistent outperformance. Domino's operates a franchise-heavy capital-light model. Over 98% of stores are run by independent owners, fueling steady royalty streams. This approach allows Domino's to expand rapidly without taking on the risks and costs of owning every location. Franchisees are highly motivated to succeed, and Domino's supports them with robust training, technology, and supply chain solutions. This model creates a virtuous cycle. Franchisees succeed, Domino's succeeds, and the brand keeps growing. As more entrepreneurs join the Domino's system, the company's reach and influence expand, creating a network effect that strengthens the brand and its market position. Their vertically integrated supply chain ensures quality and cost control, boosting franchisee profitability. Domino's owns and operates its own supply chain centers, which means they can guarantee the freshness of ingredients and negotiate better prices, passing those savings on to franchisees and customers alike. Domino's dominates U.S. pizza sales and is rapidly expanding internationally, with huge growth potential in emerging markets. From bustling cities in India to suburban neighborhoods in Europe, Domino's is becoming a household name worldwide. Their adaptable menu and efficient delivery model make them a favorite in diverse markets. Unlike third-party delivery apps, Domino's controls its own delivery network, protecting margins and customer experience. By owning the delivery process end-to-end, Domino's can ensure reliability, maintain food quality, and avoid the high fees that eat into profits for other restaurants. Their fortressing strategy, opening stores closer together, means faster delivery, hotter pizza, and happier customers. This approach also increases market share in key areas and makes it harder for competitors to gain a foothold. The result? Domino's is often the first choice for pizza delivery, no matter where you are. Financially, Domino's is a cash flow machine, returning capital to shareholders through dividends and buybacks. Their consistent profitability and disciplined capital allocation have made Domino's a favorite among long-term investors, with a track record of rewarding shareholders year after year. The brand is iconic, resilient even in downturns, and synonymous with pizza delivery. Whether it's a family movie night, a rainy evening, or a big game, Domino's is the go-to choice for millions. Their ability to adapt to changing consumer habits has kept them relevant for decades. Management is disciplined, innovative, and focused on long-term value creation. The leadership team has a proven track record of navigating challenges, investing in technology, and driving sustainable growth, all while keeping franchisees and customers at the center of their strategy. When you invest in Domino's, you're buying a best-in-class tech and logistics platform with a massive global runway. The company's digital infrastructure is second to none, enabling them to scale quickly and efficiently as new markets open up. Their moat, built on technology, scale, and operational excellence, is tough for competitors to breach. Domino's invests heavily in cybersecurity, delivery innovation, and customer experience, making it difficult for new entrants or even established rivals to catch up. With a market cap of $15.66 billion, the company reported revenue of $4.71 billion in 2024, and a net income of $584.17 million. Earnings per share are an impressive $17.33, translating into a more modest price-to-earnings ratio of 26.02. The stock's current price of $450.99 is actually trading about 20.76% below its fair value estimate of $544.61, suggesting there may be upside potential for long-term investors. Domino's isn't just a pizza stock, it's a blueprint for digital-first, franchise-driven growth. Their model is studied in business schools and emulated by other brands, but few can match Domino's execution and results. The international story, tech innovation, and fortressing strategy will keep driving results. Domino's is experimenting with delivery robots, electric bikes, and AI-powered order management, always staying ahead of the curve and setting new industry standards. It's a blue-chip growth stock with stability and upside. Domino's has weathered economic storms, outperformed the broader market, and continues to deliver both pizza and profits to its loyal fans and investors. That's why Domino's, DPZ, is my second pick. It's not just about pizza, it's about a company that's mastered the art of scaling, innovating, and winning in a fiercely competitive industry. Let's get to the final stock. Last but not least, let's talk about Walmart, ticker symbol WMT, the retail titan that's not just survived but thrived by reinventing itself for the digital age. For decades, Walmart has been synonymous with low prices and massive selection, but today, it's so much more than just a big box store. It's a technology-driven powerhouse, a logistics marvel, and a company that's constantly evolving to meet the needs of modern consumers. Walmart's sprawling network of over 4,600 stores across the U.S. is now a strategic asset, doubling as fulfillment centers and convenient pickup points for online orders. This physical footprint gives Walmart a unique edge, allowing them to reach customers quickly and efficiently, whether they're shopping in-store, online, or a mix of both. The company's ability to leverage its stores for last-mile delivery and curbside pickup has set a new standard for retail convenience. Their omnichannel approach seamlessly blends physical and digital retail, offering unmatched convenience and flexibility. Whether you're browsing the aisles, ordering groceries from your phone, or picking up an online order in the parking lot, Walmart makes it easy. This integration of technology and traditional retail is what sets Walmart apart from competitors, and it's a big reason why customers keep coming back. As the largest grocer in the United States, Walmart drives frequent visits from millions of shoppers every week. Groceries are a staple, and by getting customers in the door for food, Walmart has the opportunity to cross-sell higher-margin products like apparel, electronics, and home goods. This grocery dominance creates a powerful flywheel effect, fueling both traffic and sales across the entire store. Their online grocery and delivery services are winning over a new demographic, higher-income customers who value convenience and time savings. Walmart's investment in e-commerce and delivery infrastructure means they can serve everyone from busy parents to professionals, expanding their reach far beyond their traditional customer base. This shift is helping Walmart capture more wallet share and build lasting loyalty. But Walmart isn't stopping at retail. They're building high-margin businesses on top of their core operations, like Walmart Connect, their fast-growing advertising platform that lets brands reach millions of shoppers, a third-party marketplace that brings in new products and sellers, and Walmart Plus, a subscription service offering free delivery, fuel discounts, and more. These initiatives are creating new revenue streams and boosting profitability. These new growth engines are accelerating Walmart's transformation, driving both top-line growth and margin expansion. What was once seen as a defensive, slow-growth stock is now a dynamic growth story. Walmart's leadership team is laser-focused on innovation, digital transformation, and operational excellence, ensuring the company stays ahead of the curve in a rapidly changing retail landscape. Financially, Walmart is a fortress. With over $600 billion in annual revenue, robust cash flow, and a rock-solid balance sheet, the company has the resources to invest in technology, reward shareholders, and weather any economic storm. Its reliable, growing dividend is a testament to its financial strength and commitment to returning value to investors year after year. As a dividend aristocrat, Walmart has increased its dividend for nearly 50 consecutive years, offering both stability and income, making it an ideal choice for long-term investors seeking dependable returns. It's a stock that can anchor any portfolio, providing peace of mind through market ups and downs. During economic downturns, Walmart's value proposition shines even brighter. Budget-conscious shoppers flock to Walmart for its unbeatable prices, helping the company gain market share when times are tough. For investors, this defensive quality provides a layer of protection, making Walmart a safe haven in uncertain markets. But the real excitement lies in Walmart's new growth engines, e-commerce, digital advertising, and its expanding marketplace. These segments are scaling rapidly, driving double-digit growth and positioning Walmart as a true competitor to online giants. The company's ability to innovate and adapt is fueling a new era of expansion. Walmart's management has executed brilliantly, blending physical and digital assets to create a customer experience that even Amazon struggles to match. From advanced inventory systems to seamless checkout and personalized offers, Walmart is redefining what it means to shop in the 21st century. Walmart's sheer scale gives it unbeatable purchasing power, allowing the company to negotiate the lowest prices with suppliers and pass those savings on to customers. This creates a virtuous cycle. Low prices drive high traffic, which in turn attracts more suppliers and further strengthens Walmart's position. Forget the old narrative. Walmart is no longer just a traditional retailer. It's agile, innovative, and winning in the 21st century. From robotics in warehouses to AI-driven supply chains, Walmart is embracing technology at every level to stay ahead of the competition. With a massive market cap of $775.71 billion, the company continues to dominate the retail space. In 2024, Walmart brought in $680.99 billion in revenue and posted a net income of $19.44 billion. Earnings per share are $2.34, giving the stock a price-to-earnings ratio of 41.38. The company pays out a dividend yield of 0.92%. When you invest in Walmart, you're investing in the backbone of American retail, a dominant grocery player, and a collection of fast-growing, high-margin businesses that are shaping the future of commerce. Walmart's competitive moat is massive, built on scale, technology, and relentless execution. And with its growth story just getting started, there's plenty of upside ahead for investors who get in now. It's a foundational stock for any portfolio, offering safety, steady income, and real long-term upside. Whether you're a conservative investor or looking for growth, Walmart delivers on all fronts. That's why Walmart WMT is my third and final pick. It's not just a retail giant, it's an innovation leader, a dividend machine, and a growth engine for the future. Let's wrap up. So there you have it, Axon, Domino's, and Walmart. Three dominant companies with huge moats and clear growth paths. These aren't just stocks to watch, they're businesses to own for the long haul. Want to level up your investing? Check out my Value Stocks Investing Master Course. Link in the description. For exclusive tips and in-depth analysis, join the Stocks Galore Patreon community. Now I want to hear from you. Which of these three stocks are you most bullish on for the next 5 years and why? Drop your pick in the comments. Don't forget to like, share, and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one. Happy investing.